This conference will now be recorded.
Hey guys, welcome to the Equity Trade Room. It's November 26th. Happy Thanksgiving to you guys, to those that celebrate. Hope all is well. No trading for me until Monday, just for the sake of clear transparency. Nothing has changed on my combine, my $50,000 combine from Wednesday. Same 50,000, 226. 1781.07. And if I just show you guys my count here, you can see it's the same thing, 1781-07. This video is not about the 50K combine. It's more about something that was brought to my attention about a month ago by one of my fellow traders and subscribers, Muhammad, who's a very good trader himself. He had recommended that I take a look at the HEIKEN bars instead of the candlesticks. He said that they work better. You know, they eliminate the noise and et cetera, et cetera. So I've been doing that for the past month. And I've come to the conclusion that I'm going to use the HEIKEN for now on when it comes to my smart money trading. The main thing that was slowing me down was I wasn't able to verify using HEIKEN when there's a clear mitigation of an impulse candle, which is the reason why price comes back. Price comes back to do what? To go, fill the rest of those orders. So I got a split screen here and I want to show you guys. This is more advanced level trading. So if you're not there with this type of trading, this video might not be for you at this moment. But if you are familiar with smart money concepts, breaker structure, impulse moves, fair value gaps, etc., then this is right up your alley. On the right here is the 5-minute candlestick. Here's the order block here. Let me make this bigger. Here's the order block here. Here's your move up and your breaker structure. Now, if you rate your order blocks, etc., like A, B, C, A obviously being great, B is okay, and C is, average. This would be a B. Clearly, you have the order block. You do have the move up, not the strongest move up, but this isn't an impulse move up. There is a fair value gap here that needs to be mitigated. You do have a little bearish candle here after the breaker structure. It's a little wicky, but it's still an order block that I would take. I've seen better order blocks, but I would take it despite, it being a little wicky, because it does fit the criteria where there is no mitigation here. You have an impulse move up and a breaker structure. Now, we compare that to the HEIKEN. Let me move this out the way here. I'm right here. Okay. We open up the HEIKEN, same 5-minute. Here's your order block. Here's your move up. Here's your breaker structure, right? Let's make it a little bigger. Now, it's hard to tell on this example where there is a fair value gap. We know we have a nice move up, but where's the fair value gap to make price want to come back down and fill that gap? That was my question. And I just did a little research. There's one trader named The Secret Mindset that breaks down all types of methodologies. institutional trading, etc. He did a video on Heiken candles, and his was the most informative one that I was able to, intake information, process it, and it made sense to me. What makes a strong impulse move up using Heiken, and it gives you the confidence to know that price has to come back to fill the fair value gap, even if it's not as clear as a candlestick, is number one, if you have Heiken candles that have no wick at the open. So for instance, this candle here has no wick at the open. This candle here has no wick at the open. This one here, etc. If you have a strong move up with candles with no wicks at the bottom, and this goes the same way if you're on a short trade, a sell trade. On a sell trade, for instance, the open of the bearish candles here, no wick. See that? Open is here, no wick. Open here, no wick. And another reason why it's hard to see where there's a fair value gap on Heiken candles is the price. These bars, they don't open and close at the close of every candle. For instance, this candle, this bearish candle, opened here. It closed down here. But the next candle, the next bar, did not open here. It opened in the middle, 50%. That's another big difference compared to a candlestick, whereas we all know a bearish candle opens here, closes here, the next candle opens here. So when you have price opening in the middle of your bar, that can also throw off possible visual signs of a fair value gap. Okay, like even though here you have a fair value gap because you have the wick and then you have the open of this bearish Heiken candle, but a lot of times you don't have that with the Heiken. Like here, you don't have that here, right? You do have the open of the bearish candle here, and then the open of a bullish candle here, and a small gap. No wicks, like you look for on candlesticks, though. No wicks, right? But it still works because you have, according to my research, a strong move up. This symbolizes a strong move up. Also, what factors in, there are no bearish candles. It's all the same bullish candles. You compare that to the same move here, you do have a bearish candle here. No bearish candle here. So from a scale of 1 to 10, this 5-minute Heiken order block setup is an A. There are 3 criteria that you look for. Well, 4. Obviously, the order block, a strong move up with these bars that do not have wicks. You want a lot of them, to not have wicks. Not all of them, of course, are going to have all of them are not going to have wicks. Some of them will have wicks, etc. But you want a few on the move up, and here you do. You have 1, 2, 3, 4, etc. Right? Also, you don't have any bearish candles on the move up, and of course your breaker structure. So now you've established that. The next part of the smart money concepts when it comes to entries is you want to go down to a smaller time frame and look for your confirmation entry. So I was interested to see if we get the same type of price action on a 5-second, 10-second, 15-second. Well, let's check it out. We go here to the 5-second on the same setup. Price comes down, Here's our first opportunity right here. Here's the order block. This is more of an advanced video. Once again, more of an advanced video. There we go, that's better. So we had the order block here, the green box. Price goes up, eventually breaks structure here with this yellow candle, and it comes down. What would I rate this order block setup? I wouldn't rate it, I would rate it a C, like ABC. Why? You have the order block, yes. You have a move up. It's not the cleanest move up because you have this candle here that has no direction at all. Then the next candle does not break structure. No direction, no direction. Then this candle finally breaks and closes above structure, finally. Then it comes down and stops you out down here, right? We look at the exact, this happened at this bearish candle here, happened at 11:45:10. We go to the HEIKEN on the same 5 second. Let's find it. Here we go. Make it large. All right. Same setup, 11:45:10. Here you go. And we don't even have an order block set up here. There's no order block set up here. Here's a bearish candle, but the next candle is a nothing, and then nothing, nothing. Like there's nothing even to break here. There's no structure to break. It's all bearish candles. Structure's up here, if anything. So this move does not break up here. So we wouldn't even have taken that loss, is the point. So we get rid of that order block. Now we go back to our next possible order block on the 5 second candle. Since this one was a loser. So we get rid of this thing here. Now we're looking for another order block. Well, here's one right here. Order block. Let's make this bigger. Order block. Nice move up. Broke structure here and came back down and off to the races. Winning trade. Let's highlight it. Order block. Broke structure, clear, impulse move up, no mitigation, came down, bingo. Off to the races, 1 to 5. Let's change this color here. And now let's go to the HEIKEN and see what we get with the HEIKEN. Shrink this back. Let's go to the HEIKEN. 5 second, make it large. Here's the HEIKEN right here. Matter of fact, let's move this down for a second. Here's the HEIKEN, the bearish candle. Strong move up. What do you have? No wick, no wick, no wick. Strong move up. Broke structure here. As we can see clearly, much cleaner. I mean, this is super clean. You put the order block, you line it up. So the HEIKEN works just as well when you go down to the 5 second. Just as clean, and it helped you avoid a loser here. Because that was the first order block was a loser on the 5 second. Bingo. This is obviously, I cherry picked this, but I found this like on numerous setups. For the sake of this video, I want to show you guys. So if you want to back test this yourself, you can see that on the 5, 10, 15 second, you're going to get clearer order blocks compared to using the candlestick, where on the 5 second, you'll still get, you know, the nothing candles, coming down. Let's do it side by side. So for instance, all the way up, right? We stroll over here. Right after we broke structure here, we still have full candles. No dojis or just naked candles. I call these naked candles because there's no volume or nothing. Right here, that's a naked candle to me. It's nothing there. No volume. We have that here at 1146.50, but here at 1146.50, it's full. That's another thing you get with the Heiken. So from now on, I'm definitely going that route. I'm using the Heiken. I've been convinced, thanks to my guy, Muhammad. And you guys have a great weekend. I hope this video was informative, especially for my advanced smart money traders. Have a good weekend. We will continue our journey to pass the 50K funding challenge in the free live trade room, 6 a.m. to 11:30 a.m. Monday through Friday. The link is in the description. Peace.
This conference will now be recorded.